The UK looks to bring clarity to digital assets. Microstrategy socks more than $1 billion into growing its stack. And Swift plans to maintain control over global monetary payments. We're going to talk about how, and we're going to talk a little bit more about some other stories as well here on the Bitcoin Effect Live. Hey, listen, if you haven't checked out hodlersofficial.com yet, please do. If you take a look at the solid hockey and baseball and basketball jerseys that they have available, I got an opportunity to meet Corey at Bitcoin 24 down in Nashville, and he's great people. And the designs are fantastic. I've got a couple of baseball jerseys from him, and there's some great new merch coming out as well. You can get a Hodler's Official gift card just in time for the holidays. Okay, so you got a little bit of time left before that. But in the meantime, check out hodlersofficial.com. And if you see something you like and you want to pick it up, go ahead and use the discount code EFFECT, EFFECT, and that will get you 10% off of your order, and that helps me out and this channel as well. So welcome in, everybody. My name is Nate Martin, and I am the host of the Bitcoin Effect. This is the first time that I will do this live, and I'm going to be doing this on a regular basis as opposed to releasing a more polished video, if you will, on Sunday nights. So I hope that you enjoy the new format. If you do, I'm going to try to turn the page here and check out the comments and try to answer the best that I can. But the first thing we're going to do is we're going to head toward the news. So let's talk about some of those things. Microstrategy, they're at it again. And Microstrategy's at it again. And they have acquired 18,300 Bitcoin, and they did that between August 6th and September 12th for approximately $1.1 billion. That brings its total Bitcoin holdings to 244,800 BTC, spending about $9.45 billion in total for that stack, with an average purchase price of just under $38.6 per Bitcoin. Their executive chairman, Michael Saylor, announced the purchases, which were funded through equity sales of about 8 million shares of MicroStrategy stock to raise the $1.1 billion. The company highlighted that the BTC yield of 4.4% in the third quarter and 17% year-to-date, that showcases the effectiveness of that strategy. Now, on Thursday, Swift announced a new initiative to streamline global transactions by enabling its members to use their Swift connection for both traditional and crypto transactions. The plan includes testing multi-ledger delivery versus payment, that's DVP, and payment versus payment, that's PVP, transactions on its global platform, allowing real-time exchanges of tokenized assets. Swift's initiative focuses on the global trading of real-world assets, which could reach a $30 trillion market cap by 2034. Addressing interoperability issues, Swift aims to connect different digital assets and currencies, starting with fiat, and then CBDCs, and finally stablecoins. Now, there have been some successful tokenized asset tests, which highlight Swift's commitment to create a unified payment infrastructure for the evolving digital economy. Just my comment on this, Swift, I think, is finally recognizing that they need to keep up with Bitcoin, because with numerous examples of millions and billions of dollars being transferred over the network for less than $5 and in less than an hour, Swift realizes that if they want to maintain any control over the global monetary system, that they're going to have to try to do something with some sort of digital tokenized asset in order to try to maintain any control over the system. But the problem is that all of the things that I mentioned, fiat, CBDCs, and stablecoins, they're all centralized assets. And so what they want to do is make up the rules, make up the assets so that they can keep their grips on the monetary system. Mark your calendars for the first week of April, because you'll want to attend BitBlock Boom. BitBlock Boom is going to be in Dallas on April 3rd through the 6th, and we're going to have speakers like Parker Lewis, Marty Bent, Bob Burnett, Guy Swan will be there, and obviously the host, Gary Leland, who is a great guy to get to know. Now, I will be there as part of Friday's workshop, Bitcoin for Beginners. I'll be joined by a number of people that are going to be extremely helpful for those people that want to get onboarded for Bitcoin, a number of great educators there. So I'm really excited to be part of BitBlock Boom coming up in April. So mark your calendars for that. I look forward to meeting you there. UK regulators have proposed a bill that classifies crypto and digital assets as personal property. Now, what they aim to do is bring clarity to ownership rights, because right now the lack of regulation complicates asset division on divorces and legal disputes. So the new bill would protect consumers and businesses from crypto fraud while aligning digital assets with personal property rights like cars or stocks. Joel Hugentobler, cryptocurrency analyst at Javelin Strategy and Research, sees this as a crucial step, especially after recent crypto failures like FTX. Unlike the UK, the U.S. still faces regulatory uncertainty. It's not like they're not trying, though, because a new bill is being proposed by House Financial Services Committee member John Rose that would establish a joint committee between the U.S. SEC and the CFTC to study digital assets. Named the Bridge Digital Assets Act, the bill seeks to address the challenges of the current regulation by enforcement approach, or what I call the Gensler gangster approach, which Rose argues is pushing innovation overseas. You think? The Joint Advisory Committee on Digital Assets will include 20 non-governmental stakeholders with 2-year terms, providing guidance on crypto regulations and enhancing market efficiency while focusing on consumer protection. The committee will also explore decentralization and will hold at least 2 meetings per year. So the long and the short of it is that while the UK is actually drafting legislation for regulatory clarity, the U.S. is still trying to figure out who's going to be sitting at the table. So that's the news for this week and some of my comments. I hope that you've enjoyed that. I hope that everybody's doing well. I do want to thank my regular subscribers and those of you who have commented every single week to give me encouragement, to thank me for the news, and to say that what I'm doing is valuable to you. So this has been the Bitcoin Effect Live. I hope you've enjoyed it. If you have, then by all means, leave me a like, subscribe to the channel, and notification. And make sure that you click on those to make sure that you don't miss any episodes, including this live and also Bitcoin Basics series, which will be coming up in partnership with River.com. Check that out as well. I look forward to seeing you next week.